The recent easing of inflation in the United States has sparked optimism for a soft landing, a scenario where the economy slows down without sliding into a recession. It's like trying to land a plane on a bumpy runway. Challenging, but it seems like the Federal Reserve might actually pull it off this time. So, what does this mean for everyday Americans, businesses, and of course your wallet? Let's break it down. First, inflation has been a major thorn in the side of the US economy over the past couple of years. Prices were rising faster than most people's salaries, leaving everyone feeling like they were running a financial treadmill set on maximum incline. The Federal Reserve's solution? Raise interest rates, a lot. In fact, they've increased rates at the fastest pace in decades. It's the economic equivalent of slamming the brakes on a speeding car. Now, the latest data shows that inflation is finally cooling. Consumer prices rose at a much slower pace than earlier this year, and core inflation, which strips out the volatile stuff like food and energy, has also eased. Translation? The Fed's rate hikes are starting to work. But let's be honest, who really cares about core inflation when eggs cost more than your favorite streaming subscription? Lower inflation doesn't just mean cheaper groceries and gas. It also eases pressure on businesses, which have been grappling with rising costs for materials, labor, and shipping. With prices stabilizing, businesses can focus on growth instead of just surviving. For consumers, it means your paycheck might actually stretch a little further, and you might stop feeling like you need a loan to buy a carton of milk. Officials are cautiously optimistic, saying the economy appears to be slowing just enough to curb inflation without triggering a full-blown recession. A soft landing is the economic equivalent of threading a needle while riding a roller coaster. Technically possible, but not guaranteed. The housing market has been one of the biggest pain points in this whole inflation saga. With higher interest rates, mortgage rates have soared, putting home ownership out of reach for many. The good news is that as inflation eases, there's hope rates might stabilize. The bad news? If you've been waiting to buy a house, you might still need to hold off unless you're ready to fork over sky-high payments. Here's where it gets tricky. The Federal Reserve might pause interest rate hikes for now, but they're not exactly ready to declare victory over inflation. Officials are keeping an eye on data to see if prices stay under control. Think of it like babysitting a mischievous toddler. You can't let your guard down for a second, or things could spiral out of control again. So, what does this mean for you? First, if you have debt, like credit cards or loans, this might be a good time to look at refinancing or paying them down. And if you've been holding off on major purchases, you might start seeing better deals as businesses lower prices to attract cautious consumers. For investors, the easing of inflation could mean more stability in the stock market. When inflation was high, the market was as unpredictable as a toddler on a sugar high. But with the Fed likely holding rates steady, investors can breathe a little easier, knowing there's less risk of surprise rate hikes throwing markets into chaos. But of course, there's a flip side to this optimism. If inflation creeps back up, the Fed might have to tighten rates even further, which could risk pushing the economy into a downturn. It's a balancing act, and everyone, from policymakers to consumers, is holding their breath, hoping the Fed gets it right. For now, though, the signs are encouraging. Prices are stabilizing, consumers are still spending, and businesses are starting to feel less pressure. While there's no guarantee of a perfect landing, the US economy seems to be defying the odds, for now at least. And let's give credit where it's due. The Fed's aggressive actions to control inflation haven't been popular, but they seem to be working. It's a bit like eating kale. Nobody likes it, but sometimes it's what you need to stay healthy. Powell and his team have made some tough calls, but it looks like those decisions are finally paying off. So, as we navigate the rest of 2024, keep an eye on your finances. Pay attention to interest rates, plan for stability, and, if you can, start building that emergency fund. The economy may be stabilizing, but life loves throwing curveballs when you least expect them. Thanks for sticking with me through this breakdown of the current economic landscape. If you found this useful, or even just mildly entertaining, hit that like button, share it with a friend, and subscribe to stay updated on all things finance and beyond. And hey, if you've got your own take on the Fed's actions, the economy, or just want to vent about your grocery bill, drop it in the comments below. Let's keep the conversation going. See you in next video.